Yetta, what don't you know?
Well, you know more than I know. That much I can tell you.
Moving forward with the Dekker Team. Moving forward together with the Dekker Team.
So we're excited that we've created for you free access to over 603, actually, Life's Inside Track episodes. It's actually more like 800, which blows my mind. And is where we share insider tips, making house home, where to get the most out of your space. And the great news is you can get access to them pretty much anytime you want, anywhere you want, including our YouTube channel. So if you haven't subscribed to the Dekker Team YouTube channel, you might just want to go over there and do that. Like, even turn us off and go do it.
Oh, turn us off. That's horrible.
So we're going to explore in this episode that if we don't plan for what we don't know, and how do you plan for what you don't know? But that's what we're going to explore a little bit.
Yeah, it's difficult. And sometimes you got to plan anyways.
Yeah.
And then manage what shows up. So we're going to talk about that a little bit. So what don't we know? Well, we don't know whether rates are going up or down.
Right. We know that they've gone up, so we have some historical data. We know that there's threats of them going up again, but we don't know for sure if they will or they won't.
Yeah, months ago, the economists were saying, by the third quarter, we might see a softening on interest rates, maybe the first quarter or first half of 2024. And now we have some economists saying, we might see higher rates even more. So here's the question. We don't know whether the rates are going up or whether the rates are going down, but we can figure out what happens to pricing depending on which way they go.
Right.
Okay, so recently we were having a consultation with a potential seller, and they're saying, well, we have another place to go to. We could sell now. We could sell in the spring. What do you recommend? And I said, well, here's the thing. If interest rates go down in the spring, then prices will go up because the demand is still high, as we mentioned in the first segment, right?
Yeah.
The demand is high.
There's just concern about taking action even with the demand high. So it's a very interesting time that we find ourselves in.
Some concern. Some think it's going to continue to go down, the prices. There's concern about whether I can afford it. How tight am I willing to stretch myself? How uncomfortable am I willing to make myself to get into real estate or to upgrade my home? And so that's some of the questions, right? So if we wait till spring and rates went down, prices are going to be up. But if rates continue to creep up, what we're going to find is that prices in the spring may be lower than they are now. So if you're thinking of selling, it's give or take, right? If you're thinking of buying, you might say, well, they might be up in the spring or they might be down. But the point when you're buying is it's a buy and hold. So if you can afford to buy now, we know that right now there's more inventory than there's been in a little while.
In years. What do you mean in a little while?
Okay, a couple years.
Like 4 or 5?
We're still well below 5-year average.
Yes.
But we're above what has been the last few years after COVID and all that.
And during COVID.
So we're seeing a little bit more inventory. And when you have more inventory, it gets easier to spot the ones that really need to sell. Call them unicorns, the needle in the haystack, whatever you want to call them. We've been able to, the last couple of months, find some properties for people that we believe are significant value.
Right.
Below value, really. Below market value.
Like for sure below value, right? And how we can watch for those. So this is what we know.
You're not going to give away our secrets, are you?
Well, some watching what has happened to specific properties. So we have access to be able to watch the history on a specific property. So what we don't know is how low it's going to go before it actually sells. But what we do know that is if something starts above market value, what that current market
Should have been.
If it starts high, that by the time it actually sells, it will sell for less than it ought to have sold for or
Generally.
could have sold for most of the time.
Right.
It ends up going lower than anyone could have conceived. If you get it right on the front end, sometimes we're still seeing multiple offers. We just sold one a couple of days ago where we put it where we believe the market was, quite confident that we were not underpricing it at all. And we sold it at 8% more than we had it listed for.
Right. And the factor with that one was there were no other properties for sale in that price range. And so sometimes you get that anomaly too. As a seller, you look at what your competition is. If there's none and somebody needs to be in your neighborhood, you may get a little lift on what was perceived as market value. Because market value is truly what, a buyer without duress, and a seller without duress come together and agree on a price. That's true market value.
Right.
The rest is what we think it's going to be, right?
Right. Based on history and based on the relevant data that's available. And so keeping in mind that you don't know how many other homes are going to be on the market if you wait. Right? What you do know is how many are on the market today.
Right.
And that can give you the lift increase in value.
It can.
That you won't get if there's 6 or 7 homes that are somewhat relevant to one another and not comparable, but they have some similarities. And, you could choose this one, you could choose that one. That's got a much harder time to actually get good value. Now, as a buyer, because we talked to both buyers and sellers in this conversation, right? What Ken was saying is if you're not a buyer, you're only going to sell, right? You're moving into a rental situation or moving in with family or leaving the area for another marketplace, right? So if you're a buyer, you want to watch for the one I talked about where it's been too high and now it's come down. Because you'll probably get really good value on that one.
Yeah, for sure. And if you want to connect with us and stay in conversation with us, send an email together@dekkerteam.com. And we'd love to connect with you regularly and have you respond to us. Even if there's something in the show that you want to comment on or question or you want more information, just fire an email to together@dekkerteam.com. Now, what else don't we know? We don't know if there's future government incentives coming to help the economy, to help with first-time home buyers. Is there going to be adjustments in HST rebates for new construction? We know that there was an announcement for multi-units, but there hasn't been any announcement on singles or towns or anything like that, or apartment buildings that are condominiums, like owner-occupied as opposed to rentals. So there's that question. And the other thing we don't know is what will our future dollar buy?
Right.
What's our dollar going to be worth, either in the supermarket, at the gas pump, or when buying a home? We don't know what that's going to do. So
if you can figure out what you want to do now, plan the best you can, and then be prepared to navigate
to make
adjustments.
Make smart moves on your mortgage and that kind of thing, so that you know that you can make adjustments if need be, if things change.
Right. So planning to fail
is failing. No, failing to plan is planning to fail.
There, that's it. Failing to plan is planning to fail.
Yeah. Together, we're clarifying your options because your wisdom will flow.
Moving forward with the Dekker Team. Moving forward.